All right, welcome to The Explainer. Today, we're going to crack open DoorDash's latest shareholder report. We're going to unpack the massive, really complex system they're building to bring you, well, everything. And we're going to ask the big question, is this master plan actually working?
So let's just start right here with this quote from CEO Tony Xu. It kicks off with a problem that, sounds pretty simple, but it's actually insanely complex. Getting a burrito to your door perfectly. This is way more than just building an app. It's about trying to tame all the chaos of the real world. And that idea, well, that's the whole philosophy driving DoorDash. They argue they're not just building a product, like the single app you have on your phone. They say they're building a system, a super complex web of almost a dozen different products that all have to talk to each other and work in perfect sync to make that one delivery happen. So yeah, that's the big idea, right? But is this whole system philosophy actually translating into real-world results? Let's get into the hard numbers from their fourth quarter performance and see if this thing is truly delivering the goods. Okay, first up, just look at the sheer volume here. We're talking over 900 million orders in just the last 3 months of the year. That's a huge 32% jump from last year, which really shows you just how much this service has become a part of people's daily lives. And yeah, all those orders, they add up to some serious cash. We're talking nearly $30 billion flowing through their marketplace in 1 quarter. And what's really telling here is that this number is growing even faster than the number of orders. That's a really powerful signal for the health of the business. And all of that brings us to the top line, the revenue, $4 billion for the quarter. I mean, the financial momentum here is just undeniable. They really closed out the year on a high note, hitting new records across every single important metric. Okay, hang on a second. Before we go any further, we really need to get this term down. Marketplace GOV. See, this isn't just DoorDash's revenue. It's the total amount of money that's changing hands on the platform for every single order. It's the whole enchilada, the cost of the food, the taxes, the fees, and the tip for the dasher. It's really the best way to measure just how big the entire platform is. And when you see it visually like this, the story just pops. You can see how growth just exploded towards the end of the year. All three of these key metrics, orders, GOV, and revenue, are just firing on all cylinders, with growth rates well into the high 30s. So you might be asking, okay, great numbers, but where is all this growth actually coming from? Let's break down the different engines inside the DoorDash system that are pushing these incredible results. Well, it's basically a three-pronged attack. First, you've got their core U.S. restaurant business, which is still adding new customers like crazy. But then, look at grocery and retail. They pulled in more new users last quarter than ever before. And then, you layer on top of that their international business, which is picking up speed fast, thanks in a big way to their acquisition of Deliveroo. And honestly, this right here, this is their entire playbook laid out for you. On one hand, you have their U.S. restaurant business. It's mature, it's a cash cow, it's super profitable. And they're taking all that profit and they're plowing it into their next big bets, grocery, retail, and expanding around the globe. Now, those new areas, they aren't profitable yet, but DoorDash is betting that's where the future is. So all this rapid global growth, it's actually created a whole new fascinating problem for them to solve. I mean, how do you manage one single cohesive system when it's suddenly operating all over the world under a bunch of different brand names? And this is the perfect picture of that challenge. Right now, they're juggling 3 totally separate tech platforms for DoorDash, Wolt, and Deliveroo. It's just clunky, it's inefficient. As their CEO says, it slows everything down and stops them from really taking advantage of their huge global size. So what's the solution? Well, it's incredibly ambitious, and honestly, it's kind of risky. They're not just trying to tape these things together. No, they're tearing it all down and starting from scratch to build one single unified tech platform that's going to run their entire global operation. You might be thinking, why on earth would they take on such a massive project? Well, it really boils down to 3 big strategic goals. They believe one platform will make them way more efficient, let them innovate and roll out new features much, much faster in every country, and finally, let them unlock the true power of being a global company. And this quote from the CEO, man, it just says everything, doesn't it? This is a massive, expensive bet on the future. This isn't something you do if you think you're past your prime. It's a huge, long-term investment that they believe is absolutely critical to dominating the delivery game for years to come.
Okay, so that's the grand plan. Let's pivot to the future now and see how all this feeds into their forecast for the new year and, what kind of challenges they see coming.
So, looking ahead to the first quarter of 2026, the company's signaling that the strong growth is gonna continue. They're projecting marketplace GOO to be somewhere in that $31 to $32 billion range, and they're also forecasting some really healthy operating profit. And when we're talking about profit, you're going to hear this term a lot, adjusted EBITDA. The simplest way to think about it is it's a clean look at the cash the main business is pulling in, before you account for stuff like interest payments, taxes, or stock-based compensation. It's a snapshot of the core operational health.
But look, it's not all smooth sailing. The company is actually pretty upfront about some headwinds they're facing. They're still spending a lot to integrate Deliveroo. They took an estimated $20 million hit from some really bad winter storms in the US. And they're also dealing with the usual seasonal increase in what it costs to pay Dashers. And that all brings us back to the big final question, right? This whole thing, this massive bet on one single global system, is everything. So are they building this unbeatable fortress, a competitive moat nobody can cross? Or are they just building a machine that's so complex, so interconnected, that if one little piece breaks, the whole thing could just collapse? That is the multi-billion-dollar question.
And that's our deep dive for today. Thanks for digging into the system behind your delivery with us.